This video is a replay of a trade I took today. Now, it probably goes without saying, but I'll say it anyway. I am not a financial advisor, and trading entails risk. Just because I got these results today doesn't mean that I can get these every day, nor that you can. Remember, the entire premise of the investing project and the $1 million experiment is that I am not an expert, and yet I am learning how to do this. So for heaven's sake, don't just blindly copy me. Instead, find a mentor, someone who is an expert, and join their community. Pay for their mentorship. This approach has worked very well for me, and it likely will for you too. So use this video partly as education and partly as inspiration. After all, if I can learn this, you can too. All right, this is the first trade of month number 2 of the $1 million experiment, and it was a successful trade, I'm pleased to say. So we were looking at the ES, the MES, the micro S&P futures, and you can see here that we've had. So let's look over at the hourly for a second. You can see that the hourly has gone up and up and up and up and up for quite a number of days, but it had a big gap down overnight, and this was related to the Iran war, and then of course it was starting to recover from that to some degree. But then we had the first inkling of a red bar here, and it's something that I wanted to look into shorting. And so what I ended up doing, if you see here on the zoom in on the NQ for a second. So this is the NQ hourly. This is the NQ 15-minute. You can see this cluster here. I would have liked to have put in a short right below this little cluster. So if it breaks, then it could go substantially short. But the problem is that you can see each one of these little bars across here represents 50 NQ points. That's $100. And so you can see here that to put this trade on, this is going to be 1, 2, and then some to get above here. So it'll probably end up being a $250 at risk or thereabouts in order to put this trade on. And I didn't want to risk that much. Whereas if you look over here at the ES instead, it's a lot less. Each one of these is a 15 handle risk, and that's only $75. So you can see the distance from here to here is about just a little over $75. I can put on 2 contracts for 150. Now it might end up being, I think it ended up being 2 points more than that, so like 17 handles instead of 15. But it was very close. So in other words, I could put on a similar trade with a lot less risk. Now it might not have moved as much, but I'm managing the risk first. It would have put at risk a lot less. So that's what I decided to do. So we did a 2 lot, and I put the sell order in right below this first red candle. And what you'll see in a second, actually, I'll let this go for a moment because this candle hasn't closed yet. This next one here, and I want it to close before I get in. So right there, you can see that this is a red candle. It pulled back a bit, which I don't love that wick, but then it came back down again, and made it look like, okay, we're definitely retracing. And then this is just a shade lower. I'm going to put this sell order right in here at 71.46. And then we let this go, and that's exactly where we got filled. Filled at 70. Now, I mentioned I needed to move this to a couple more. The 15 handle automatic stop placement put this right 1 point above the high. I want 3 points above. So I moved that up, so that's not 15 handles of risk, it's 17. 2 contracts. Now the targets were put at 30 and 40 points. That doesn't matter because we didn't actually get that far anyway, but I have them separated so that I'm able to take a profit or a partial profit when things start to move in the right direction. I couldn't really do that when I'm only trading 1 contract because you only have 1 contract. So as soon as you take a profit, you're out of the trade. And I wanted to have the opportunity, if it was going to go lower, to take a partial profit. That way I've locked some gains in and I still have more available to me. At least that's the theory. It didn't quite play out the way I would have liked, but we'll let this go. We'll watch it a little bit here. So what's happening here is it looks like it's starting to go down a little bit, but then it's kind of flirting with some space above, and it just goes back and forth a little bit, and then suddenly we catch a news bar, and you'll see this in a second. This is a news bar again relating to Iran something or other, I suspect. But you'll see it. There it is. Huge sudden move. Now, when it did that right away, I thought, oh, I better grab this because things snap back, especially in this marketplace. It snaps back before you know it. So what I ended up doing was I took one of these and I actually moved it up to roughly where this was, and I dropped it in place. And I think I ended up, this was 71.46. I think I got to 71.20. I got 17 points out of it. I can't quite remember where I got it. 71.29 or something. I can't quite remember. It was something like that. I'm gonna put it right there. It's something like that. I got my trade on.
It failed.
Okay, it failed. And then this, because as soon as this moves 15 handles in the right direction, this moves to break even, and then it's trailing after 15 handles. Now, I don't know if that's a good thing or a bad thing, honestly. I have it doing that because lately the market's been just so persnickety that I want to lock in some gains when I get a chance, because it just snaps back and I end up with nothing to show for it. So I have my last contract trailing 15 points behind. And it takes me out. You'll see it in a second. It snaps back, which is exactly what it does. And so, boom, I'm out. So I was out with 17 points on the first one and 6 points on the second, for a total of 23. So that is $114, I think, is what I ended up with. And so, fair enough. That's reasonable. I'll take that. Especially when you consider that when this thing went on for a little bit longer, it ended up coming down a little bit further, but then it ended up snapping back, and I'm just as glad that I got the money out that I did when I did, because it turns out I wouldn't have ended up with anything more. I might have actually just stopped out break even. So this did go a couple of points lower before snapping all the way back. It's hard to optimize and get every last cent out of it, because you just don't really know what the thing's going to do. So you place your trades the best you can and try to be consistent. But anyway, as you can see, it's snapping right back, and I would have been out even, quite probably, anyhow. So it was fine. It was $114 for the first trade. That's about I guess a quarter, maybe 20% of the way to our target for the month, and yeah, can't complain.